All right, so you guys that are here live, this is obviously relative because obviously it's going on. You watch this video in 6 months, it's still good, it's still important. The tool I'm going to talk about, but the coronavirus would have been passed. Right now, we're in the thick of it. Are we peaking when they have these epidemics? Are they pandemics? Are they peaking? That's the other side of the scare with stocks and with bonds and the whole financial industry. The worry is, what kind of financial or economic impact will this have? So even if we peak, even if they really start to downtick the number of cases or deaths, and it's apparent that we're on the other side of the mountain and the worst is over, the economic impact and the carnage is going to be left behind, right? The hurricane's gone. Now let's see what kind of damage it caused. It's not good. It's not going to stimulate economic growth with all the quarantine and essentially shutdowns in China and some other countries. I mean, they shut down some cities bigger than New York, or as big as New York, and all the factories and the supply chains that go through that country. Second biggest economy in the world. So it makes sense that when you lock down and paralyze that country for a period of time, you could have zero growth for an entire quarter. They're worried about an entire half or an entire year, right? And if it goes into the pandemic, first time I heard that word was Sunday. The media and then Bloomberg started reporting it Sunday, Monday, and it was a couple days after the Friday sell-off. They didn't want to go into the weekend long Friday, but then they wake up on Monday and it's like, wait a second, things are worse than the Friday sell-off. The news is worse, Iran, Italy, and it's like, wow, that's why you had this accelerated sell-off, and you could not, and this is what's important, and I'm going to draw this on the screen, and I say this, but it's worth repeating. If you go lower fast, two things happen. Either, oh, it's cheap and you're going to rally, and you found out that the prices were cheap, and usually they're not cheap for long, right? If there's real good value out there and there's a cheap price, generally product isn't there for long. People gobble up product at that price and it's gone. In this case, price would rally. But what we had Friday, you had downside. Overnight Monday, you had downside, and all we did in the first hour or so Monday, they couldn't take back any of this slack. A lot of it, they couldn't do it. So when you don't get people, buyers, arriving at much lower prices 48 hours later, then the prices aren't really cheap, are they? They probably have to go lower. We talked about that going into late morning and early afternoon yesterday. They did break. And that's true with anything. When you have a rubber band stretch and it's not stretching or it's not snapping back, it's probably got more to stretch. Same thing happened in the overnight market. They tried to pop them. They came back to below where they closed, 27 even, and then all hell broke loose once they got through 28. And they went through 14. 14 was important. It was the overnight low. It was yesterday's low, and it was a daily low from the Iranian crisis, or no, from when this coronavirus started. So that was three important levels. They shot through it, and now they're trading the lower 90s. So they're trading 25 points even lower than yesterday's low. But prices are not cheap if buyers aren't showing up. And the analogy I draw is when you go to Costco and you see some of those people in those little tents and they're selling something, and they've obviously got a price attached to it. If nobody's visiting them, prices to it. Let's say the product is interesting, but nobody's visiting the tent because price is too high. If they cut it and slash it and nobody comes, and they slash it again, if people come, that's the bottom. That's where price invites in buyers. Right now, the longer you stay without the big bounce, the more we have to the downsides. In an event like this, when fear is front and center. Correlations. I talked about this yesterday in the room. I got an email that someone's doing a webinar on core market correlations and how they did a study that's got 10% dropout rate when the average is like 1% in their webinars because people find it boring. And I get that. I see that. It doesn't surprise me. It's the most important thing you'll ever learn in trading. If you don't think market correlations are important, go to a car dealership and buy your next car. Don't look at any other dealerships. Just trust the salesman and maybe bring in a Fibonacci chart. You hear me say that a million times, and it doesn't get any less funny every time I say it. But point is, bonds in fear go opposite stocks. You better know that. You better watch that. If you don't believe it, look at charts. Bonds go up and when stocks go down. And coronavirus is the F word. F-E-A-R, F word. Fear, fear, fear. It's not the fear of everybody in the world dying. It's the fear of what kind of economic damage and carnage did it cost once the hurricane has left. Skies have cleared. It's sunny again at some point, but how many houses were destroyed? Maybe you'll look and say, hey, it's not that bad. Seemed worse than it was, but they're not going to know that. And the U word, uncertainty, is the worst word markets want to have to digest. They'd rather know the details of something bad than uncertainty and no details of something that it might end up being good. That's upside down, but that's how it works. Uncertainty is a killer for the bulls and stocks. And so anybody that thinks that this is the start of the bear market, they don't know. They're guessing. When they're wrong, they go quiet. When they're right, they'll jump up and down. They've been wrong about, 12, 15 events since 2009. You start with Greek. Remember the Greece crisis? Remember the debt ceiling? Remember the fiscal cliff? Remember when they tapered bond purchases and unwound QE? That was, I think, May 13. Ebola. Remember that? We can go on and on. That's bearish. That's bearish. You know what? When it's bearish, don't try to fight it. There'll be downside opportunity because things go down faster than they go up. Don't try to be a market timer and be perfect. All right, so let's get into this quick meeting. I don't want to go on too long. People are either trading or want to trade or whatever, and they should. So this is, look, why do I have that as the title? Well, secondly, if you're not looking, you won't see it. If you're supposed to find a guy wearing a black shirt, but you're not looking, you ain't going to find him. You ain't going to see him. So there's a lot you're going to miss when you're only depending on your eyes. Because if you're not looking at it, you're not going to see it. You're not going to notice it. You're not going to recognize it. Is it important? Obviously, yes. It's very important. You can't drive unless you could see. But think of the disadvantage if you could hear, but you elected not to. You elected to not listen when you're in a car. You're at a disadvantage. You hear someone screeching, you hear a horn. There's obviously advantages to hearing when you're driving a car. There's obviously advantages to hearing for anything that you're trying to do. Just go out there, plug your ears so you can't hear anything, and think of the disadvantage you are at recognizing and absorbing data. How much more stress you're going to put on your eyes because you can't hear. And so with this audio that I do that keeps me privy to the market when it's slow, it's even more important when things are fast, because the faster things move, the more you're going to miss. Faster prices going up and down. I don't care how great visuals you have. If you ain't looking at it, you're not going to see it. So you're going to miss more when it's moving more. And that's why I wasn't going to do this webinar until the volatility hit us. And I'm like, this is a perfect session for this. If you're a Sierra user, I'm going to show you these Edge Zone audios that I use. And they have made me alert and aware of buyers and sellers coming in without having to see the edge zones. You should still have edge zones because you want to see the visual and go back to see where support resistance is. But when this female male voice comes in, it's a no-brainer. And the people that don't have it are foolish. It's a one-time cost, like $70. I don't even really make anything on it based on the development, what that costs. That's not why I'm saying it, because it'll help you. It'll actually reduce your distraction because you're not putting so much stress on what you're looking at. So you got to introduce audio. Here's another audio that you guys use that is helpful. Us in the room, right? Like Peter this morning talking about the bonds over and over and over again. Tom repeating it because Peter was emphatic and underscored how important, how strong the bonds are. Look out below moment. We were trading 40, 50 points higher than we are right now. That's audio, right? Wouldn't be able to communicate in the team room or in a trading room if we couldn't hear. So the visuals for edge zones are great, but you're missing a lot and you're putting too much stress on your eyes. So let me show you the charts with, let's close this for now. The chart on the left, I duplicated the chart you're normally seeing. and that's the one on the right. I duplicated it on the left, but I pulled everything off of it. I pulled all the edge zone visuals and everything else off of it. All right. And so this one is the one you're used to seeing in the room. Edge zones, green, when they go from red, tested to pink and all that stuff, right? Green, green. Now I just have, backed it up. Now here on the left, I stripped everything off instead of the edge zone audio. All right. Let me share computer sound while we're doing this, because I want to show you something with it. Now I can't find the toolbar. What the hell's wrong with this thing? I like to meet. There we go. Share computer sound. All right. Now, nothing's on here but the footprint and some audio that's going to come through. And you could change the settings. We had them set up the same for edge zone audio, ETG audio. That's it. Go to settings. You got the same settings as you do for the edge zone visual ones. What your min diff is, what the imbalance is, the name of the person here changes the accent, different accent for a different market. You don't want to keep repeating if the price is staying there. You could adjust that.
Bank of Canada's Lane
volume.
saying that
you guys are listening to
BOC collaborating with the Bank of
England
audio. On monetary authority of Singapore to identify the pain points of cross-border payments. It does not believe there's any need to issue digital currency at this time. Bank of Canada's Lane saying that the Canadian authorities would still need.
Right. Don't think that that's the edge zone audio. It's not. That's straight to news. So, so the settings make it really neat, because every time you'll get a red or a green one over here, be in the same chart. You don't have to create another chart. You're going to get the audio piece to play here on the same chart. I just duplicated it to give you guys a sense of you don't have to overwhelm yourself by depending on one of your senses. We are underusing our sense of hearing. If you're walking in the woods, trying to find your way out, you're hunting something or you're being hunted, it helps if you could hear, doesn't it? But then you come in, you trade, you got all these screens, or you got one screen, and all you got are your visuals. If you're not looking at your charts, you're not going to see what might appear. You got to be looking. And I know there's some outfits out there that put out Squawk stuff and everything, but it's all complicated nonsense. This is inexpensive. It's a one-time fee, and it just allows you to change the settings, because all you guys are familiar with edge zones, right? So the settings you're familiar with. I lowered it to 50 because the volatility has created less that trades at each price. Let's change it to 25, and then we'll get more squawks. We should. Now remember, I took away the edge zone, so you won't see it go green for an edge zone paint. Just the audio. If you go to settings here, you can see I have the edge zones working. I go in the audio. These settings, I think, are still at 150. Let's lower these to 25.
7.5.
7.5. Did you hear that? Let's not lower these. Let me show you guys this. Let me raise the volume. That's probably the issue. Not the issue, but I want you guys to be able to hear it so you know what it's going to sound like. There we go. All right. So a male's voice will come in with the price that he's squawking. If there's quick buying aggressively. In other words, if you know what makes an edge zone appear and your settings are the same, it'll get a male voice to come across.
8.5.
Now you heard an English voice, right? That was the NASDAQ. Female NASDAQ means they're selling in the NASDAQ at 8.5. Did you hear that? And that was at 08.5, it seemed like. Wait. That was at 08.5. Why do I know it was the NASDAQ? I wasn't even looking at it because it was an English voice and it was female. And you could change that setting if you want, as far as the name of these people changes the name of the, or changes the accent. So if you want a female to be the buyer, have had it. But whatever you have, get used to it. The whole point, and here, this is actually the point I'm trying to convey. Let's even do this. Maybe look at a chart. Forget about it. Now, I don't advise you do this. I'm just trying to make a point, because you do want to see where it came from, and you want that kind of reference, and that's what's important about charts when you're looking at them the right way. But if you're not looking at this chart, it might as well look like this to you anyways, right? If your eyes are somewhere else, this chart might as well be black because you're not looking at it. So if you don't see the reds, you don't see the reds and the greens, if you're not looking at it for the reds and the greens, you ain't going to see them. I'm trying to get these charts side by side. Here we go. How many guys have this and use it? This ain't brand new, but there are more people that should have it than have it. What am I looking for here? I want to go in here. That's Trade the News. CDC spokesman, coronavirus epidemic is rapidly evolving and expanding. That was 25 minutes ago after I think we closed the room. Is my screen frozen? I think it is. I'm trying to host this meeting, set these settings, and listen to Trade the News all at the same time. And it's all doable. You guys got to be able to absorb.
4 even.
4 even. Now you hear it? You didn't have to see it. All you got to do is listen. It's a female voice. So selling came in at 4 even. If you're looking at your dome, you're like, wait, this ain't going down. And now you think there's some upside and you wanted to buy it anyways. And the thing just rallied. You don't have to look in order to see it. Or I should say, in order to react to it. I believe she just came in at 3.5. So that changes the dynamic 3.5, 4 even. We get back above there. They could pop.
2/4.
2/4. That's the NASDAQ. She's coming in selling 2/4 very quickly. That becomes important. And that thing is skipping around that NASDAQ, isn't it? So if it's like slightly below 2/4, I'm comfortable. It gets above it. Again, you got to give it a little room to breathe because of the volatility today. But you don't have to be watching something in order to absorb data from it. If you guys had this tool, you could practice by closing your eyes and listening to the voices, and you'll actually get good at being able to have an idea after you hear it where price should be.
2/4. 2/2.
Now she's coming in selling 2/4 and 2.5. Did you hear that?
2 3/4.
Now he's buying 2 3/4. That's 82 3/4. So it's a male voice. I know it's a buyer, and he squawks out the price he's buying. She squawks out the one she's selling.
2/2.
He's the one that's stuck. Remember, we rally up a little bit and it's weak. She comes in selling. He comes in buying. I'm more comfortable below. If I'm short, I'm more comfortable below where he's buying because he's stuck. I don't want to actually hear her come in too much selling unless the market goes down like it is.
8 even.
I want to hear, if I hear a female voice and I'm short, I better continue to get paid. Because selling's coming in, so price should be reacting lower, right? And so you get a better idea of
1 even.
What should happen versus what is happening. You'll be looking at your dome and you could be hearing this stuff and saying, wait a second, they're aggressively coming in. This guy's coming in buying it. He must be a goof. And then wham, it goes 81/4 offer, and then maybe down it goes. But you start to read it, you understand context. Remember 2 weeks ago we talked about the move? Where are you at on the map? It's like, so it comes down in here. If I get buyers, that son of a gun better go up quick because it's the low of the move. Buyers should come in and kick it up. I don't want to hear her voice because then I'm worried that maybe the bottom is in if I'm short. What do you mean the bottom? Well, we just broke. That's what context is all about. Not comfortable short until we get below where this goof was coming in buying it. Then you could start calling him names if you want. That's all part of being in the market. If you have Alexa and you're not calling her names and getting in a fight with her, you're not engaged. At some point, you had the juice to go lower in here with the selling. And you see it in the visual, but you heard her voice. You heard the NASDAQ come in, her voice, and it was, I think, 87. 88. We already have broke. And it's like, okay, we better stay a little bit at or below or around where these women are coming in selling it, or else they're stuck. Selling can't get it to go down. So just trying to make a point with this dark screen. And it's no more important than when markets are moving fast. The faster things move, the more you're going to miss. And guess what? Also, the more important it is. Because the more risk and the more reward you're in front of. The faster you're driving, you're going to get to where you're going faster. But God forbid you get in an accident, you have a chance to get hurt worse. There's more danger, there's more risk. Faster things are moving, there's more risk. So you better have all your senses firing. Now, I'll show that to you, Bill. Give me a second.
2 3/4.
Where is this at? Go to the software page on the website and scroll down to Edge Zone Audio. see a video, learn more about it, but get it. Don't do the annual, do the lifetime.
3/2.
Because I'm having him raise it to like 150. It's only 70 now. I'm having him double it. When I say him, guys developed it for me because I don't develop this stuff. And there's not a lot of money in this, trust me, but there's a lot of value in helping it. So do it. Again, it only works for Sierra. So if you don't have Sierra, then we'll see what we could do for Ninja, but I think it's either Sierra or Ninja, right? But so go there, go to software, get it. Don't get the recurring one because it's a pain for me or us to manage. Just do it one time. It's 70 and you're done with it. Unless you want to pay 150 next week. And I'm not saying that to get people to buy it. I like all you guys that are in this inner circle group, but I am putting on an email and telling people that that's what it's going to cost if they don't get it, because I don't want to support this
2/4.
with trickle in people here and there. But it's been something that's solid. It works. People that have had it because it's been out for about a year, don't have any problems with it. At least they don't tell me of any problems with it. You don't have to keep your chart black, just trying to make a point, but you put yourself in a position to actually follow the market better through even an exercise. I'm going to actually get rid of this chart because I don't use it. I just duplicate it for this meeting.
Three-quarter.
You know, it's like in the room when I say, hey, this thing better go down quicker. It's going to bounce or it's going to rally. Like now, you just heard her come in and it couldn't break. It's probably going to go bid. It doesn't mean it has to follow through and go to 89. You're just trying to predict the first couple ticks to get better at predicting the next couple ticks, and the next couple ticks, and the next couple ticks, right? If you're bullish, she comes in and it doesn't go down. That's your, what are you waiting for? There's the dare. You got a shot. Shoot. I don't want to waste the bullet. No, you got to waste the bullet because you know what should happen. What you don't want to see if you get long is what? What don't you want to hear, rather? Let's just stay to hearing. What don't you want to hear if you're long? I don't want to hear a male voice. And if I do, the price should already be going bid at the same time.
Three-quarter.
If I'm short, I don't want to hear what I just heard. She came in at 2.5, 3/4, and I'd be like, my goodness. No, Joe, it's not purchased through Emoji. That's done through this is done through my site. I had another developer put this out, and it's
5 3/4.
It was all about making it inexpensive and having the settings the same as the edge zones, but it's through my site. It has nothing to do with Emoji,
7.5.
to answer your question. Go to my website, to software, and I think it's the first product up there. Here's my site. Go to software. First product up there is this Easy Audio.
6 3/4.
Verbal journal. You should have that too. Listen, it's probably cost me more money to have the logos done than I made on these products. And I'm not crying poor. I mean, there's always more time, effort, work into things than people realize. But I like to just have stuff work and give people a better chance than they had without it. And if you think, I'm going to be too distracted and confused, are you kidding me? You're going to be more distracted? Or are you going to be able to
7/4.
be able to absorb data easier because you're relying on an additional sense you have? God gave you that sense of hearing. And unfortunately, there are people that are deaf, and that's terrible. And you see how emotional it is when these people are given, there's something that allows them to hear for the first time. They get all emotional. Take advantage of the ability to hear. Keep it simple. If you don't believe how powerful that aid is, put on headphones or something that completely cuts out all sound and go out go out for a whole day. And you won't regret it. You won't regret anymore the ability to hear and the value it provides. But yet people come to trading. The only thing they hear is me talking, Tom, maybe Dave, if you're in the trading room. Hey, and that stuff is important. But you got to be able to do a few things at once as far as your ears go. And that allows you, the additional senses you use allows you to do more, absorb more without feeling overwhelmed.
9.5.
And if you find yourself distracted when you trade, the answer isn't cutting things out. The answer is adding more stuff and getting less distracted. You got to get good at being less distracted without cutting out what's distracting you. That's never the solution.
7.5.
So I hope you guys get this. It shows me that if you're on Sierra, it's only going to work on Sierra. Let me make that clear, because I wasn't even going to do this, but it was something I could do short and sweet. And with the volatility, I've depended on it more. And I thought, well, wait a second. I know most people don't have this. It's a cheap and easy add-on. Once you buy it, you'll get an email of what to do next, and it's an easy add-on to Sierra. But get it. And then make your settings the same as your red and greens will come up. Now you got things rolling. Now you're in sync. You're hearing things that musicians hear that we don't hear, even though we could know how to listen to music. Right? Musicians hear different things. That's what makes them talented. That's what makes them sound, right? That they hear something off in the drums, something off in the rhythm section. We don't hear that. So as traders, what's going to put you in a position to hear what's important, to see what's important, and get everything in sync? So a layperson be like, how did you know that? When they're looking at these screens, how'd you know? How could you watch all this stuff? Well, the answer is I don't. I refer it like mirrors. Certain things are the windshield, certain things are mirrors, and then I got things talking to me. If I knew how to juggle, I'd be able to juggle and read a chart.
Even quarter.
But not trade, because my hands would be tied up.
Even half.
Even quarter.
You guys have any questions?
Even half.
Let me give you a quick survey. How has everybody done combined the last 2 days with this coronavirus? Good, bad, okay, or nothing?
Quarter.
Yesterday and today combined. Johnny's working on it. Here's some of the results. We got a good, an okay, good, good, nothing, okay, good, 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 good. Wow. An okay net positive. That's good. And 2 more goods. And a great. Wow. Well, that's good to hear. And a nothing.
Even quarter.
Even 3/4.
One last thing on the charts. I'll give you guys. Now, I haven't really looked at these charts for like a half hour, 45 minutes. So let me just give you, I see this chart. First thing that comes to my mind when I see this chart is like the boxes. All right. They had a little base there. If they over here would have got through there, they could have went. But I look at that. That's the first thing I seen. Second thing is this is the move lower. This is a retracement that is keeping this move validated much above here. Then they have a chance to retrace that move. If bulls want to have any hope, luck, or effort, Number one, they better hold it at 87. But this whole picture, having not looked at this chart until back in here, I think, what the hell is taking bulls so long to get their act together? Which means one thing, more downside, or just the probability of more downside. Every time it looks like the bulls got a chance to go up, like after the room and before this meeting, they rallied here, they hold it there, they hold it there, they hold it there. A head fake, but they can't get through here. Gone. Every time it looks like they have a chance, they turn the ball over. There's so much upside that they could realize, but prices must not be cheap enough to invite buyers. The guy in the tent at Costco is waving to people. He's even got a couple pretty women, and yet nobody's going. It's like, price is way too high. I'm not going to waste my time. He even tried to bring me in, and nobody wants to come to the tent. David, nice job. If you have not had technical issues today, then your data's good. I haven't had tech issues in the longest time.
9/4.
From a data standpoint, and CQG is my data. And I think that's the first thing you should change. If you're always having trouble when the market kicks up, I think that's important in this meeting. So I hope most of you guys, I hope every guy in here with Sierra gets this audio. If you get it and you don't like it, it's 6 ticks. Throw it away, but you'll like it. It's 6 ES ticks. It's actually, how many micro ticks is it? It's about 65 micro ticks per one lot.
6 3/4.
Don't think too hard.
8/4.
Diligently react. We'll see you guys tomorrow in the trading room. Just remember what I said. This thing, these bulls, these longs are terrible. They can't get their act together. And if we hanging around the lows within striking distance, as we get close to the end of the day, you could have a bloodbath blowout downside. Where yesterday you're down 1,000 in the Dow, guess what? Today, we're only down, well, I say only, but 400 is a big number. But we opened up like 200 higher, right? So we're 600 off where we opened, and we can go down another 600. We'd be down back-to-back 1,000-point days in the Dow. And wouldn't that surprise me? One thing I mentioned in the room every day, but not in here yet, is got to cut your size and increase your risk. So a year ago, from even May, we couldn't have said you can't get smaller in a one lot in E-minis, but now you can with the micros. Take advantage of that, because if your size is one lot, you can go lower now, and you need to when it's volatile. You cannot expect to get out the same 6 tick loss if that's what you're used to, because 6 ticks is nothing.
2/2.
Moving 6 points at a time, for crying out loud. You could be dead right and you keep getting stopped out of all great trades. It's good for all the indices except the Russell, I think. But I think it does work for the Russell. I got to check. But it works for everything.
6 even.
And you could put different kind of voices, Stan.
3/4.
Accents, like you hear that English voice. That's NASDAQ buyers and sellers. CL, yes. Works for that also.
One quarter.
What's that, Dave? The micro for it? No, I was talking about someone asked me about if the audio works for other indices, and the answer is yes.
Three 3/4. 4 even.
All right, we'll see you guys. Most of you guys are in the trading room. We'll see you tomorrow. Be careful. Manage your risk before you take it. It's even more important when it's volatile. Your stuff has to go your way even sooner rather than later, or you're probably wrong. You don't want a 2-point loser turn into a 20-point loser. And do not add, and do not let a small, stupid decision turn into a big, giant problem.